All right, so ladies and gentlemen, you are in my community, you're a subscriber in our group, or you're on Plan B Express Cash Flow Solution Club. Take this training very seriously. Of course, remember we have the simplest and more precise trading strategy that can always win for you. If you're not winning with our strategy, now the challenge is not from us. The challenge is practically from yourself. All right, so now let's go into the action. Now, the action is very simple. So remember what we do so you can take note. The full script is available and on the forum, so you go through it. I'm not going to go detail. So Plan B Express P&L, that is Valley's P&L trading strategy, right? P&L. So P&L trading strategy. P&L trading strategy, we seek to answer this. So answer the following. Answer the following questions. One, where? Two, why? Two, why? Three, when? So these are the three questions that these strategies seek to answer. And so here has to do with higher time frame, which has to do with higher probability of where to react, which has to do with point of interest. So you go and read more on the script. So we're going to be very fast, and then procedure to take entry. Now, second has to do with confluence, or what we call factors. Yeah, so and here is both higher time frame. Yeah, you can call it higher time frame, medium time frame. While here, this is when this has to do with precision to trigger right action. So these are the three things we are going to answer. So now how do I go about starting my trade? So you can screenshot this so that we can be on the same page. If you have not screenshot it, maybe you wind back so that you can screenshot it. So it's very important, right? Precision. Okay, so let's go quickly. Now so now this strategy, and I'm going to be dwelling more on currency trading. I've told you to trade, first step, of course, you need to understand your fundamental. I'm not going to that detail. First step is that, and I will recommend beginner, take just one or two currency. And I recommended Euro USD. You can still check other ones. So first of all, you want to. Sorry for that bridging transmission. So very quickly, let's just do. You have to go on weekly time frame. There are things I do, you may not necessarily do it, but if you are consistent in your trading, you have to do this. Okay? If you are consistent in your trading, you have to do it. And what's it? Go to line chart, and I'm going to look for key levels for weekly. Yeah, so not horizontal line, I use parallel channel. Okay, so I need to remove this one so that you will not get confused. So I have to remove the extension left and right because I only did that to help me. So now let's go this way. I use this because it's going to delineate zones. So you can see when I extend, I'm not going to be very fast here. So you have to, so you're going to do it to all the major levels that you probably maybe expect. So now I'm going to clone it and then so that I can place it. You can make it very tiny just to have places you know that they are very obvious. Okay. Now, this is a job for you because if it's the currency or the instrument you trade very regular. So we have this here now. So we'll check which one will be more consequential. So just understand that. Or probably we have it here because this is obvious. And we have more touch points, though body and the wick of the candles, a lot will be touching there. So take the same thing. Well, maybe we should leave this, but I don't want it to be too rowdy. So daily can sort out some places. You just want to have levels that will not lie, and then that will be too obvious. So let's have this here. Don't let it to be too fat because when you go to a lower time frame, shouldn't give you too much concern. Okay, so see what I'm doing? So I can still have one at least. So please pay attention to this. It's going to help you anyway. So let's look at this just for this bottom, or we have something here. So overall, let me just keep it there. Anywhere. So this is weekly. Now let's go back to the candlestick. So you can see now. So you're able to delineate. Sometimes if you see that, some of those points are too over cluster, probably you want to have another. You see the one I wanted us to have here, probably you can use daily to delineate those points. All right. Okay. So you can use to actually align that. So we're going to go, this is weekly. So you are interested in just major key level on your weekly, and that's exactly what we have done. So when the market gets to your weekly key level, you are conscious to understand and see what market actually want to do. So now, what you are going to be using more are your daily time frame, 4 hours and 1 hour as a currency trader. Sometimes you can scroll down to 30 minutes, but most of the time you're going to be using is your daily time frame, 4 hours, 1 hour, and you go to 5 minutes of 15 minutes just to find a sniper entry. Do you understand? Because if it's currency, you don't need to disturb yourself, go too choppy, because that can confuse you. So let's go to daily time frame quickly. Now there are a few things I've highlighted that you are looking out for on daily time frame. So if you open your chart to daily time frame, the practical thing not to deceive ourselves you're looking for is the trend of the market, which has to do with what we call about where, right? That is the context. So you have to identify the context. So in this case, sometimes you can use just line to mark some of those obvious points. So when I come in a day, I want to understand context. The first thing I do, this daily candle. The first thing I do, because overview, checking it that this is an uptrend. There is no doubt about that, okay? I'm not going to go too much on your daily time frame, but this is an uptrend. For the fact that it has pushed back, by the time you go to this high, low, and a high, this is still a low. that has not been taken, and this high has not been taken. So the most significant high that like a dealing range you are having here now are this guy and this guy. So I'm not going to go to detail. So you want to learn more, that's going to be more advanced. Okay. So now on a daily time frame, there are things you check. You are checking liquidity areas. All right. Liquidity areas like what? Already seen that this is the weekly key level to this point. So the liquidity area, like what am I looking for? First, I'm going to use what we call horizontal ray to delineate yesterday high like this and yesterday low. They are very important because when you come, you need to write a story from there. Sometimes what you ask me, why do I identify this? I identify it. Sometimes market could just take that because those are external liquidity. Do you understand? So these are external liquidity. So the market, I've identified the high and the low of yesterday. That are there other areas we call them pivot point that I may actually want to actually get? Maybe here, this was a previous day or the other day, which align with all of these points. This one is too far. Places that are too far that are not important for me. Probably I could just identify this gentleman here. So that's, I've done the first thing. This is like top-down analysis. The next you are going to travel to is your 4 hours. Now, okay, before I forget, when you come to on a daily time frame, as the candle is moving and manifesting themselves, you want to find out, not to waste too much of your time, where you can actually find an entry without so much stress. And where are some of those areas? Some of those areas, we call them the power of three. So this is it, for example. So imagine when you come here, you have identified this is call it for me. This is your weekly key level. And so the market has gotten to this point. And so I've found out this is actually a liquidity void. Now you expect the market to actually balance it. That's one thing. Two, I've come here, this is like a pin bar on a daily time frame. So that means, so let's say this is on a Monday, then on a Tuesday, that means by Thursday, you are looking for an entry. So using power of three. So power of three, CRT, there are detailed things I've taught in my script. You may want to go there. That's not for basic, but you can always spot it for an entry. Look at it, you can spot it, and it's easy. You can spot it in different places. So we find that. Then do we have that anywhere here? No. Okay, no problem. So we'll go to 4 hours quickly. Now, 4 hours, by the current prevailing circumstance, 4 hours by the prevailing circumstances. So if you look at it now, it's like you're having a double, is it double bottom or something that this is supposed to be the neckline. So that means after this, you expect the market to pull back to this. So you can identify all of those chart pattern. I don't use them so much. Now, so I'm not going to concentrate because you want to trade. I'm going to concentrate. Here was this. Look at it. Let's take a trend line. Here was like what? A trend. All right. Here is like what? A trend. All right. Here is like another what? Another trend. Perhaps. Can you see that? So if that make a lot of sense for you, then pay attention to the learning. It's going to help you so much. Okay. Now here we go. And I'm looking for the simple thing you are looking for is actually the structural trend and bias so that you can find where, okay? So if you look at this market, you know it was on top of this place. That was amazing, right? So I want to find where perhaps maybe when the market was here. So this was a break and, a higher time frame break can form a weak, but it was a quick reversal, right? And then this was the high that brought about that. So you now have to understand market structure. You don't need to know too much, okay? So, but there's something that happened here. This is a low now. So let's take this gentleman off. So here is a low, okay? Here has created a low. And then, So why this one was coming. So we find out that the market again created another point. If you want to go on your higher time frame, I probably can spot power of 3 here. This candle, which is going to form my entry. Number one, because I'm already on a key level, my stop loss is going to be below here. But I want to sit down to refine anyway. But so give and take, if you look at it here. So here should be the market. This is a break of structure, which is like liquidity sweep, however. And then you have the market. All of this journey came down here. So all this move up here, this is now market structure shift. So it has actually changed direction. That's what it means. So this is market structure shift. We call it MSS. All right. So this is market structure shift. So what you are waiting for is that the next thing is called the origin. So there are a few things that are very important in just your delineating. So now this is the question one, where? This one, the question one, where? And additional to it here. Okay, let me quickly differentiate them. So let's take this gentleman. Let's take off from the border. Let's take, I don't want it to be too thick. Okay. Now, this is what happened. As at the time you come here, you are a very conservative trader. You don't need to rush yourself. So coming down to this point is that you have found where. This is where one. This is where two. This where is called order block. And then you can write it. Let me just delineate it. You should understand. I always label my own with the time frame 4H UOB. So that is 4 hours unmitigated order block. So here is another Y or where, sorry, 4HFEG. Remember, why you are doing all of this, the market is still somewhere, or you saw it somewhere here. Do you understand? So here is where, which we call point of interest. All of them are where, where. Okay? So if they are where, so what to expect the market to do is that a return of this market to this point to form your entry. For me, I've done some abracadabra, but I want to make it very simple for you and straightforward. So here is my where and another where here. So here is my where and here is another where. So when the market return back to this point, it tap into this, then I'm going to go to a lower time frame. Maybe what time frame? 15 minutes. That's where you go down to those lower time frames. Sometimes you can even go to 1 hour. Okay. Now let's first of all go to 1 hour, even 30 minutes and all of that. So let's go back and see. So this is it. The market return here, right? Not this one, I think. Yes. This is it. Travel down to it. It didn't get back to the, this has not been mitigated. So if I go to 30 minutes, okay. So what you're looking for is for the market to actually return and take permission before going up. Okay. So that's exactly what you were doing. So which actually did. So now I'm going to 15 minutes. What can I spot on my 15 minutes? I could spot my power of 3. So what do we mean by power of 3? There is a candle, number one, who tap in here first. That is not all. I'm waiting for the second candle that tap in, and that's like sweep of liquidity. That is accumulation manipulation. And at the same time, it's a CRT because it's closed inside this candle. So without wasting much time, this is my entry because you've marked it, and then so here's my entry and my stop loss. Sometimes you can put it below the fair value gap, or but this is currency. You don't need to be afraid. A lot of people put their stop loss very far, but I actually refine so much. So this is like 10 pips. So even if you are going to go below the order block, let's look at it. That's about 48 pips. But below the FEG, that's about how many pips? 20 pips. So, but below here, so if you now want to go, now remember, I'm not going to go detail about this, but remember, so if you look up, I always tell people, look at your left. This is a swing high. This is supposed to be from your first take profit or even give and take 1:2 risk reward. Look at the 1:2 risk reward here. Now, remember what I told you people, that while you are trading, there is something that matters to you. Now, let's say this is a prop firm. So you are building $50,000 challenge account or 100,000. Let's say it's 100,000. Your daily drawdown is 5%, which is $5,000. Now, I say engage only 5% of your daily drawdown, which you have put here. Now you're coming back to say, okay, what is the number of pips that this is recording for your entry? You can see the strategic entry. So this is 10 pips. So I can just take it to 15 pips. So here is 15 pips, 1, 5, and then you calculate. Now you say you can use 1.66. Oh, wow. Now 1.66, that's going to look big. No, the lot size you use is not the problem. In what context do you use it? Because first we are finding where. Now, why was that? What are the factors? Because why is that there is an FEG, there is this and all of that. So the precision of when these things are formed, we have seen like power of three or when it tapping, some wait for by going down to more lower time frame to see market structure shift at that point. But this has given you what you're looking for. Even here, it gave you. So here you will have even been the trade. Let's look at it quickly. Let's look at it quickly here. And then stop loss below the candlestick. So that means just below here. 1:2 risk reward will have been finished here. So, but that's not the issue. Remember, you are a meticulous trader. So now let's expand it. TP1 can be put in. So imagine 1 point something, 1 point something lot size. So that means how much do I actually say I'm going to spend? That means I say I'm going to spend 250. Now you can divide it into three. Maybe 0.5 in 2 and 0.6. Or you can just sum it up 0.1, that's 1.5 pips lot size. So divide into three, 0.5 in three places. So the first one you're going to enter is the 2 position. Pam, pam, pam. Then the remaining one, you can enter if there's a pullback. Unfortunately, this was a very fast execution. No pullback, no problem. Now, let's look at how many pips did you record. So let's look at it. 1:2 risk reward is first going to register. Maybe you are actually targeting this high. This is already 1:3 and all of that. Then the next one. So let's go by 1. So 1:3 or so. The market was so fast. I always look at my left anyway. Now 1:4, which is about, let's say 40 pips. So 0.5 times 40 pips. So that means no, $5, sorry. 5 times 40. This will have given you 200. So do you understand? Because this is, yeah. So other one in that order. So now let's quickly go and extend our market because you are supposed to just come down and return back to your higher time frame. So let's go back. So you can see what form your decision here. I'm not talking of these places now because it may take me more deeper knowledge distribution. Now, so see the market, you have done this. So sometime while you are waiting for more market, see what happened. This market, this is 1:5. Then the market came down again. Coming down, look at another. This is a pin bar. Though I think this is another reference point that I wouldn't be able to understand what actually play out there. But you saw a bounce. If you cannot find an entry here, there's an entry here, power of 3. Now, that's a very powerful one. So, but going back to your higher time frame, that will have formed a nice decision for me and you. Now, this is what now happened. So if you look at it now, going back to our 4 hours, and then whichever way. Now, going back to our 4 hours, what has happened here? Let's go. Sorry, just a moment. Mm, sorry. Okay. So, okay, I wanted to say I have an entry for gold somewhere. All right. So now this is the point. So you can see this entry. You can see how I got the sniper entry. That was a very powerful one, right? Now, so here comes. The market has done its own move. And what now happened? There was another break of structure. So let's take this guy. And where's the break of structure? There's a new one here. This is a break of structure. Now, this structure got broken. So that's when you come back here to find another origin. Can you see now? So this is where again. So always understand your where. Where? Now, if you see this, your where was too plain, no struggle. You always allow, so no struggle of this your way. How do we mean? The market actually traveled down very well to this your way. And what did it form? Part of three. So even if I didn't travel to a lower time frame, because currencies is not too volatile and does not have too much volume. So it's not gold. So even if I'm going to be working with this, where is the week? I can even extend it here. So that means this is going to be 27 pips. Now you target, look at your left, you target that point or even the high, because if you are going to look at it now, let's go. 1:2 risk reward already is done here. So, but you want to target the up there. Sometime this trade can continue. Remember, you started here. When you do, you are adding more position. This one is still running. And now, so since this one is still running, let's extend it out, right? Because there's a position that is still running there. So if we extend it out now, that is 1:9 point something. That's almost 1:10, which means you're talking of 10 pips and you are getting about 96 pips already. Yes, you understand. Now, so the market continue. 4 hours, so good. Now, so sometimes I don't necessarily need to travel down so much. Now, so let's go here. We have another break of structure here. Here is still there. All right. So another break of structure happened here. You are now going, we are broken. Then what do you do again? You look at the source again. Where? This is your where. Always understand your where. Your where is the key important thing. Now you still have another where, which is like what we call the fair value gap. But all the banga fall inside oil. So now chances are there here that you are going to be stopped out if your stop loss is not wide. And that was the signal I sent. And the signal is still running till this recording I'm doing. And look at it. This is the power of three here. Now you have entered here. And then your stop loss, instead of it at the bottom of that week, I put it here. Many do not understand why I put it there because of this other block. I expected to I don't even know what I was doing that I had to extend it. So 1:2 risk reward. Let's go. So that means 1:2. We are close to it now. But I put first take profit here because of this high. Now let's go. The market came down. What are you supposed to be doing? This is where you are supposed to be adding more position. Oh, yes. So by the time if you go to lower time frame, you can find this entry as appropriate as possible. Then that way you're going again another 57 pips. But if you go down to more lower time frame, so then let's go that when the market came down, you are adding more position and then that means the stop loss can still be in that same place, then that will be another 1:5 or so, thereabout. This is why I recommend that once you pick an instrument for a particular period, maybe for a particular week, and it's doing well, don't change it. Just stay with it so that you can be fine and maximize the opportunity. Do you understand what I'm trying to pass across? It's very important so that you don't waste trading opportunity. Some of those things we do, we waste trading opportunity because we just want to. So you can see how it's simple to identify. And I can tell you that this market, since it's breaking all of this point, where do you expect it to go? To this weekly key level. Now, for a man who have identified an entry earlier enough from this bottom, I think we got one here somewhere, I can't remember. But for anyone who had gotten an entry from here, I think from here, and the stop loss was somewhere still there, I can't really remember. So I think it was 10 pips. It was just 10 pips. Yes. That first entry was around 10 pips. So we say, let's make it 20. So what if it's going to travel up to this point? That's 1:16 risk reward. You hear me right? That means losing about 10, 13 pips to make about 222 pips. Now, I use 0.5. So 200 pips multiplied by $5. So that's $200 multiplied by 5. This is the simplest way of trading. And then you can be fine. So because you can leave the instrument as long as possible. The only difference you do is that you want to look at time of, what do we call it? Time of news so that you'll not be affected. But imagine the trader has run like this. So by the time you get to that point, you are trailing your stop loss. You hear me right? You are doing what? You are trailing your stop loss. So trailing of your stop loss is a must if you are building up your account in a gradual, systematic order. So that is the simplest way of trading. So you can still take another instrument and do the same thing. You are going to arrive at the same answer. The only difference is that order can have more volume and have better spread than one another. Example is if you go to, okay, there's a trade that we entered and it's still struggling up to now. So if you look at it, this is weekly. So what do I want to do? Oh my word. So you can see currency is good to see a bigger picture. So if I take my channel line, can draw the same way you did that other one. Remember? Just to tighten it a little. Then you can extend it. This should not give you problem at all. It's very, very simple. And I listen to a lot of people. There are a whole lot of things you will learn when you are within our ecosystem. Those of you who have subscribed to Felix Inner Code, or those of you who are Plan B Express, yeah. So Plan B Express Cash Flow Solution Club is going to be very helpful for you. So I think we can find this here, something like that. Yeah. So let's go take this one. So I think something like that can happen here. So I don't want to go too much. So this is already done. So can you see that? So you actually delineate all of these points so you can do more at the bottom here. You understand? Now, it will make your work so easy. Sometimes we do advanced setting on all of these lines, so but I don't want to go there too much. So now we'll go to daily time frame. You understand? So your daily time frame. So if you look at it now, I've gone to my daily time frame. So what has happened for this market was a very simple thing. And simple thing in the sense that this market is obvious. Oh my God, this trade has been massive. So what do you have? You actually have from here, high, low, high, low. Man. So this is another high that just got broken here. Maybe that's why you didn't see this one travel down here. This is where this one was broken. Now, another thing I probably do not share much because I can't share everything. So this is a break of structure. So all of this nonsense is doing here has not broken anything because this was a buy side liquidity, right? And it was waiting, has not been broken. It just got broken newly. And now, so you now say, okay, broken. Where? There are so many where here, so you don't get twisted. So this is a where. Do you understand? This is a where. So if you can expand it up here. I want to make trading fun, ladies and gentlemen. If you are listening to me, just tap um make sure you subscribe to this channel. And so we're going to be doing a whole lot of things to make trading fun. Me, ordinarily on a daily time frame, upon all these shenanigans that this market was doing, I will have found another entry here. Okay, this is another entry I will have gotten here, right? And now this is another entry I will have gotten here. You know what I'm saying? Now, so this is a lot of things that now, so here finally the break of structure, I'll have to wait. So the pullback. Funny enough, you see, delineate this on weekly key level, and it actually arrive at the weekly key level, right? Now, alignment, this is called an overlap. This is an overlap. So this is in resistance and all of that. Align with it, right? And then this is still another part of three on daily time frame for that matter, ladies and gentlemen. And so even if you're not convinced, then by there's this engulf this. So you are finding an entry here. So let's quickly look at this now. For instance, so you don't stress yourself over trading. Oh my God. If you come into our ecosystem and you can simply follow instruction, just follow my Babio. What do I mean? Okay, so this is daily time frame is going to be very bogus. So probably I will have to refine to 4 hours. You understand that, right? So let's go to like 4 hours because this is daily. But of course, there is nothing wrong even when you are trading that way. So on 4 hours, so I will have to refine this entry. Do you understand? So we have gotten the structure on daily. So on 4 hours, this is a break of structure on daily. So coming down here, so coming down, let me take out this. So remember, this is your weekly key level. So what has happened here is that it was a sweep of liquidity. So look at it here. That is a set side liquidity. And now what happened? We break it and induce the market. So sometimes people actually waited to see a total shift because this is a break of structure and this happened. So here, what has happened again is that it created another high, a low, and then this is a change of character. Here, you probably don't see it. Don't worry. I'm going to explain no deeper things. So this is the market. So come back to break this, and then this is another block. That is where. Always understand our where. So it's still the same, right? But this is what's going to happen here. The difference here is that your stop loss is not going to be too laborious. Now, other people are going to take in here before this engulfing, but you may want to wait to close above this. So this is actually your entry because it has engulfed this, but a pullback to this point is rather not safe, all right? But this is the safest way. Having change of character here, you expect a pullback into where, okay? So you have to answer the question by yourself. This is where, and again, what do you have here? You have a fair value gap. So the market tap into it. So inside that, your fair value gap was the entry. So now, this is what this one is going to do for you. It's going to reduce your stress of having a very big stop loss. Probably it can even just be below the other block, perhaps here. So you can see now this is going to be like average of 56 pips. Now the first target is this place, which is about 1:4 risk reward. Then you are looking at your weekly key level. So that is what? How much is that, guys? That's about 403 pips. Holy Ghost fire. Now, so let's go. So if you are doing that, and then so 56 pips, and how much do you want to risk in this trade? Maybe $250. So you go back to the way we do. So now say here, Now, so let's say 60 pips is what you are going to find here. Calculate 0.4 is what they ask you to use. So probably if you refine more, you are going to find more, better entry. I'm just trying to be fast because it's currency. Now, with that, you're entering, and then so if you get to 400 pips, then if you use 0.5, so that's going to be $5 multiplied by 400. Do you understand? Yes, so that's going to be $2,000 using $250. And funny enough, this quickly manifested. Now we return back to the daily too, and probably still return to your 4 hours. Remember, this is a break of structure. So after this has been broken again, so this is a structural break again. Ladies and gentlemen, you have to understand this very, very well. Now, this is another break of structure. When did it return back? So now, ordinarily, so let's take out this one. So this is your where. So always answer the question by yourself. This is your where and another where down in the bottom, no problem. Now, so this is the thing. You have so many where. This is your where, right? Now, all of these, this is like, oh my God, help me out. Liquidity void all through here. But so we're going to just take one fair value gap over here. So probably take all of this. But another thing you want to look at, the market again can travel back to the support or resistance. So this is a resistance. Do you understand? Now you have to be very sharp. Okay, so this is a resistance that now form a support. So if I go back to 4 hours, it's going to give us a different thing altogether. Remember? So we go to 4 hours. Even by 1 hour, you're going to find a different thing altogether. If it's going to use our signal, this will have signal a buy. So let me go to 1 hour. So sometime, when you go to those lower time frame, it can quickly give you exactly what you are looking for. But I think this guy had a very broader this thing spread that can waste your money for stop losses. But I think it's very volatile too. So here is the change in state of delivery. So we actually have here, this is an engulfing candle at the close of it, or probably you want to wait. This is a break of structure and you wait here, but this is an engulfing candle. Perhaps when you take an entry here, now this is going to be this, and then your stop loss invariably below this low. That's about 49. You can see that this guy has so much big, large. So you first target here. This is already 1:2 risk reward. Okay. So, but all of this jungle actually creates another entry here for you. But you will enjoy all of this thing I'm saying if you stay with an instrument over a period of time. I'm not saying just trading one instrument all through, but let's say today you want to trade, you just pick that instrument and face it. Now it's going to make a very huge difference, and it will discipline you enough to always find a new opportunity. So let's go to on the daily time frame again. I think this guy is crazily volatile. Is that true? Yes, I think so. Now, so this is this now. So you have another break of structure. So just understand this. This is a break of structure, a return back. This is an amazing instrument too. I think I'm loving it. Euro SND. Are you serious? But not all the time. So here you have this. You just have to remove fear. So the question again is where? I think this is the opposing candle. Even if you cannot see that, so this should give you that where, right here. So that should give you the where. And now you have even your weekly key level is another amazing stuff that happened there. Then the power of 3 on daily actually play out. So other things you can go to lower time frame. Now the next you're going to have is this one. Okay. So you have this one. This is a new and more recent break of structure. So let's go this way. So this trade, I wonder why it's just struggling here. So this is a break of structure. All of these, you have so many where here. So this is the first where. Do you understand? So it actually break it. And the challenge here is that this is a breaker block. I just don't know what this guy is going to do. I think he's getting closer to exhaustion point. He has never wasted time like this, but let's watch what play out anyway. Because I have position, I'm trading on this thing. Now, but the major where, so this is a breaker block, and then it's going to be stressful. So we have another where. on top of the key level, and it's a big challenge. Oh. The market didn't get there, and so you don't really know what to trade. I think I got this signal from Beckonet Software, but I saw that the market movement was still okay, and so stuff like that. But this was the first way, and then it has turned into a breaker block. So let's hope if we're able to manage to break this, but I'm afraid. So you see now, so this is a limitation up here, and now we have this was broken. And remember, this is daily time frame. Look at it. So we ought to have got a bounce from here, and then, so not here, but close below here is already a rejection, right? This is a breaker block, which is a rejection. So anything here now, maybe the market will still have to travel back to this point, perhaps. So it's going to waste time because the trade has been on since on Monday or something, and just struggling, enter good profit, enter loss again, and all of that. So this will have been the most perfect place. Then, so you can see your reasons, confluences, factors for why this, why this, why this, and all of that. So, ladies and gentlemen, that's how you trade your currencies and you'll be fine. Euro USD, I sent to a forum since now, is still magnifying and engulfing the fire. All right. Now you want to be part of our ecosystem, Plan B Express Cash Flow Solution Club. It's not costly. It's not $1,000 yearly. It's not $500 monthly. It's not even $200 monthly, ladies and gentlemen. It is not even 500 at $100 monthly. It's just $150 a year. You will learn all of these things I'm saying. You have access to the script. You have access to some information, live streaming, and all of that. And you'll be nicely enjoying yourself and enjoy your trade. Then the same thing. So if you don't have much money, you can start with $30 monthly or $60 3 months or $100 6 months. Maybe $100 6 months. Imagine you pay $100 for 6 months, and within 1 to 2 months, you start trading. Let's say you register with $100 now, right? You have access to Signal. We still give signals and all of that. Outside that, you have access to Signal. Then imagine now you are trading and then you get a particular trade, one ratio. So one ratio, how many risk reward? And you get $100 within a week. You have already covered your 6 month subscription and you keep enjoying yourself. All right. So those of you already in the system, maximize every opportunity. The script is there for you to study if you are confused. This is Felix Medai Jimo, and he's the team leader of Plan B Express. Do have a nice time. Bye-bye.